Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. If it's aggressive growth stocks you want to hear more about, well, you've come to the right place because we have Bill Wilton here. Bill is our aggressive growth stock analyst at Zacks.com, and he's brought another couple of winners with him today to talk about, stock-wise that is. LHC Group, LHCG, the ticker symbol, is one of them. They are in the medical arena?
Yeah, what they do is a home health care component of either rehab or hospice care. They have a couple other areas that they venture into, but it is primarily home health care for Medicare recipients. So there is a little bit of political risk there. You never really know what's going to happen. I'm going to show a chart a little bit later. You can see the volatility around the elections, which is pretty key. But they just announced their first quarter results and really blew estimates out of the water. Revenue was up almost 50%, and they actually raised their guidance for the full year. They're now looking at about a 30% year-over-year growth rate for this year. They are maintaining their Zacks #1 rank, which is always good to see. And our Zacks analyst has a target price on there that gives it plenty of room to grow. It's trading at about $5 less than the projected target price, and it's a pretty decent value. It's trading at just under 10 times forward earnings.
Okay.
Here's the chart I was talking about earlier.
There's that volatility.
Yeah, you can see that right there and toward the end of last year. But one of the things I do like about this chart, and the reason I showed it, is you can see in their relatively short corporate history, they have yet to miss an earnings estimate. So that's always good to see, especially in a tumultuous environment that we've been in for the past, it seems like forever, but year and a half or so.
Right. Then there's PennantPark Investment Corporation. PennantPark. Want to clarify the pronunciation there because that's a tongue twister.
Yeah.
PNNT, the ticker symbol on the NASDAQ, right? In the investment arena somewhere.
Yeah, what they do is they do a variety of different types of financing for mid-market companies. So essentially what mezzanine lending and direct lending that they're involved in is for companies that they've already established their business, they've already grown their product, they just need additional funding to bridge that gap between a mature private company and then go into a full-blown IPO. So they'll look for mezzanine lending to get them to that next level, which is interesting because a lot of investors obviously don't have the financial capital to get into that area of investing, and by looking for a company like this, you get access to those kind of business opportunities.
Kind of unusual that in this environment there's actually somebody out there willing to extend business credit.
Yeah, and that's one of the things. There's still companies that are growing out there in the private arena, and they need funding just like anybody else does at any other time. So
sure.
It's just fewer and further between. But if you find a good quality company like PennantPark, then you're obviously going to be better off. They just announced their earnings estimates also on May 6th. They just met expectations, but what I really like to see was that they're projecting about a 200% growth this year. The estimates are up since the last earnings announcement, and they're still trading at a pretty decent value. The PE ratio is at about 7 times forward earnings. They did dip to a Zacks rank of a #2, but as our viewers may know, that can be just because of the fact that we only allow 5% of the companies to be in that universe. Their estimates have not changed. There's nothing deteriorating here, but it could just be because their last report was over a month ago now. The Zacks rank tends to give priority to companies that have more recent earnings upgrades.
So 2 is not necessarily a bad thing.
No, I mean it's still on the scale of 1 to 5. It's still a buy. It's just. And you can see that it just dipped down today. A lot of times you'll see stocks on the cusp of that 1 and 2 level bounce back and forth a few times. Yep. Nothing to be too worried about.
Okay.
And the chart, you can see that it's on a great rally. It's almost tripled in value since its lows this winter. And there's a momentum indicator down there, the MACD, for those of viewers that follow it. It could be headed for a crossover there, so that's something to keep an eye on. But for right now, everything's looking good.
All right. Do you own either of these two?
I do not.
For more on more aggressive growth stocks that Bill has written about in the recent past, go to Zacks.com's homepage, and in the upper right-hand corner, next to the aggressive growth listing, is a headline. Click on it. It'll take you to Bill's most recent story, stock, and archive of about 3 or 4 others at the bottom of that page. With Bill Wilton, I'm Terry Ruffalo.